roll your futures. Well, Pete, you want to roll your futures because one, it's time to roll your futures, and two, you want to continue your exposure in your different trades, whether it's the stock market, interest rates, metals. Now we've got oil, we've got cannabis futures. And the nice thing about futures, Pete, is going to the small cannabis futures as opposed to a cannabis ETF or the stocks themselves is you're getting cannabis exposure. You're getting 21 stocks in the cannabis realm there, Pete, for I think it's about 10% or 15% of their value. That's what you have to put up in the ETF and stock world. You have to put up 50 or 100%. Now, the only thing that you have to worry about is this rolling to continue that exposure. These July futures, Pete, anything that ends in an N21 is now going to expire on Friday afternoon. We'll talk about what that expiration actually looks like. But all you have to do is if you're long, S420, N21, Pete, and you want to continue to be long, you have to sell the N21, buy the Q21, which is August, and you'll expand that exposure for another month. Right. And it's just like we say all the time. It's like having to brush your teeth before you go to bed or anything like that. It's very quick.
Putting on the right sleep clothes, but we've covered that before. You know what's great about this? It'll be funny to see it as the success of the small exchange continues to grow, and traders get used to things very quickly. The way things look. And what I mean by that is the liquidity, the way they perform and move against other things. And they come to expect that, whether it's a certain liquidity profile, depth of market, whatever. Now, this rolling that we all do, whether it be equity indexes or currencies or metals, it all happens at the same day, the same time, and they're cash settled, which means there's no worrying about any stupid underlying the components of the index showing up at your door. Now, in the world of existing futures, and we've said this before, and it's true, every single day of the calendar, there's at least one thing expiring in that world. It is very confusing. It'll be interesting to see. It's one thing to pitch this idea of simplicity. Now that this world of traders, this growing world of small traders is here, it will be interesting to see. Some people will cross over, and we always say smalls and, not smalls or, in terms of adding product. But how aggravating what you and I dealt with for 20 years as professional traders, and just had to kind of swallow because we didn't have a choice. How aggravating that will be. So this is, when we built this small, simple, and standard, this is an important, simple part of this easy idea of maintaining exposure. I just want to do it in a single click, and you just move on to the next month.
And here's the thing, like I know a lot of people out there, I've emailed with people and spoken with them directly on Twitter and a lot of other places. A lot of people are like, well, why are you guys doing this monthly? Why can't you just have, all-time futures, just no expiration? It doesn't exist. Like we are on the cutting edge of a lot of innovation in futures. And that is on our docket to be like, let's try to create some futures that don't have an expiration. It's not doable. Like the technology does not exist yet. But then the question becomes, well, why aren't you guys doing it the way that these old futures are doing it? And it's exactly that reason that you say, Pete, like I traded interest rates professionally, and interest rates have the same expiration cycles as equity index futures, March, June, Sep, Dec. And I found myself, I had to roll these interest rate products this week. And then I have to roll these equity products this week. And I have to roll my commodity products this week. And so, yes, we did sacrifice a little bit of the gap between rolls. But what we gained, it's always pros and cons to everything. What we gained is you just have one time to roll everything. And that's the end of it. And I think that's a huge plus, as opposed to like, we get this every single week. Someone asks me, is it time to roll product X? Is it time to roll product Y? Ags are a mess in terms of when you're supposed to roll and when your active month is going from this month to the next.
I still have to look because they're so far ahead of when the contract says. But, we've been both asked, why don't you go to quarterlies, which would be every 3 months, like some of the treasuries you mentioned doing, not to speak out of school. But one of the great things coming up soon in the world of smalls are options on smalls. And what we like are things that expire concurrently. So
Yeah,
we get I call it the ultimate elegant future, an option on future, because it all just collapses neatly into a bundle and I'm done. There's nothing I have to do. I could start going out to Frank and we could start going to wrestling early. But that's taught. So there is some reason behind this. And Frank
sure.
points out a great point too. This wonderful market we have is supported and is surveilled and watched to make sure everyone's performing and the integrity is there by several different government agencies. And having a perpetual future, like you mentioned, or a daily future is a great challenge in the world. Doesn't mean we don't keep trying on it. And the small exchange is always working on innovating, but this is what we believe the most elegant solution we have moving forward is. And so a long-winded version of new and innovative ways that we're looking at, but right now this monthly is a very clean, elegant, easy way to do it.
Sure. Because I can empathize more than any. Like the last thing I want to see is someone on Twitter or in my inbox being like, "Why did you guys do this? I forgot about the roll," or "I rolled at the wrong time," or something like that. And I can empathize with that. But yeah, like you say, Pete, everything we do is to try to create the simplest process possible. Like we didn't say like, "Oh, let's do monthlies because like who cares?" And it might be a pain in the neck for everybody. It is because we've got these options coming out. We've got so many different things, and it's like in the grand scheme of all these products that are launching, both futures and futures options, what is going to be the simplest for everyone? And it is, one time a month, rolling all your products to the next expiration. It's as simple. At the end of the day, once again, I do empathize with everyone, but at the end of the day, it's as simple as like, if I'm long SM75 N21, I sell it and then I buy SM75 Q21. If I'm short SPRE N21, I buy SPRE N21 and I sell SPRE Q21. You can do that in almost every platform with one click of a button, one price there. And like we always say, just make sure, the only thing that you want to make sure is that you're doing it during liquid times, which is for the smalls, anytime between pretty much 8 a.m. Central and 3 p.m. Central, right. Because then, there's going to be backwardation and contango, and there's going to be debits and credits. But
I'm so glad
those things
that
are so small in the grand scheme of things, right, Pete?
I'm so glad you brought that up. So you will see sometimes the price difference between July and August, the N and the Q, when you roll. And I always get an email. I rolled, my long was trading at 75 even, and my August is now trading at 75.10. Where is that $10 that I paid to roll that future, or 10 ticks? It is not, when you roll, you establish a new cost basis, but it does not change your realized or unrealized P&L in your statement. There is no, you're not paying anything extra to do that except the transaction fee. So don't get hung up on that term structure changing your strategies or feeling that it's taking something away from you. Term structure will either be positive or negative, and it's really just it has to do with a number of variables that we're not going to talk about because they don't matter. Just realize that it's just a small portion, that don't look for that debit or credit. It's not there. Just a new cost basis with monthly futures, especially the small. It's that roll cost or that roll difference. I shouldn't say horrible to use cost after that. So that roll difference is really immaterial. So single click, easy to do. I want to extend my duration. What happens if I don't?
Well, we'll get to, I just want to use a quick good example is like crude oil, the August futures, which everyone should be in for SMO. Crude oil is down $2 today. And now if you rolled from July to August crude, you went from, if you were short, then you went from being short at 74 to short at 73. But guess what? Both contracts would be down $2 today. And if you were long, you would have been going from being long 74 to long 73, a whole $1 worth of difference between the contracts, but the same difference here on actual movement. And that's just to say that, like, if you were long from 74 and now you were long at 73, it's like, oh, wow, like, I am long from a cheaper price. No, you're not. The futures are down $2 the same way. If you were short, it'd be like, oh, now I'm short from a lower price. This stinks. It's like, no, it moves the frickin' same after you roll. Don't worry so much about it. And also, if you don't remember to roll, don't worry so much about it because
Oh, I
they
always
don't.
forget the smiley face. I love the smiley face.
Yeah, I don't know why this guy always gets you. I haven't changed him once. All the times we talked about rolling futures, but yeah, Pete, you don't get any physical assets. You don't get any increased margins from going from futures to actual, big amounts of stocks or gold or what have you, cash markets on your books. It all just expires to cash. And so, like, for instance, if you had bought S2Y at 150, big move, and this is a top product that I know a lot of people have been long and should look to roll, this small 2-year. If you did buy at 150, and it expires here. I didn't update this. It expires here around 250 where it's trading right around now. Then you would just get $100 in your account, the money that you made there, and that's it. But you'd lose out on the exposure. So not a big deal if you let things go through Friday's 3 p.m. Central settlement there, Pete. But you do want to get ahead of these things and roll them so you don't lose that exposure, especially in a market that's moving, 50, 100% on a weekly basis here.
I love these twos. These twos are just they're just a great trade. And guys, you're gonna see. This is just the tip of the iceberg. I mean, you got the pullback you wanted back to 150. 15 ticks or up to 25 ticks, which in the world of anyone's mind would say that rates are incredibly low. These are going to be a fun thing to trade this year. I got to tell you, I'm so excited about the twos. And you can see on a percentage basis, huge moves. So it's as simple as that. And this is housekeeping. And it's like, how do we make it easy? Do I put Frank in his outfit that I like and make him, sweep and no, we just just pull out the dustbuster, turn it to roll, turn it to R, and boom, we're done.
I have nothing to say.
All right, let's wrap this baby up then.
Thanks so much for joining me for the most awkward conclusion to small stakes, everybody. We got more futures action coming at you. Markets are starting to move. Everything rolling over a little bit. We'll see if we got some trades for you. Hang out for Splash and the Futures coming up next. Thanks for watching, everybody.